Hi friends, welcome to the Weekend Investing Daily Bite of 8th of December, Monday, start of a bloody day, bloody week, and the entire market was looking very, very weak. Of course, while it sounded like a joke few days back that every time Putin visits India, India market falls. Once again, we have seen the same thing playing out. Do read the disclaimer and move forward in the video. The average fall from 52-week high now for small cap stocks is 27%. So the average small cap stock is down 27%. Out of 250 stocks in the small cap index, we have 201 stocks which have fallen more than 15%, some as high as 65 to 67%. And I'm talking about 52-week high. This is not even from all-time highs. That number is even more dark than this. So there is a sense of fear in the market, especially in the micro cap and the small cap space in the market. We'll talk more about this at the end. We will cover one more interesting tweet, so you can stay tuned for the rest of the video. Let's look at some charts. Nifty completely erasing what we gained in the last two sessions, down 0.86%. I wouldn't say everything is washed out, but yes, the move that had started on Friday certainly has been negated in a big time. So the rate cut that was done and the move that ensued after that, that has been nullified completely. In the Nifty Junior, you can see a very, very sharp cut where a complete rounding top pattern has been made. And this sharp sell-off that we had in September, we are again at the bottom of the same point, minus 2.05% here. And going forward, perhaps we will retest this bottom and see if we are going down. Mid caps also losing significant space. We were for the last 2.5 months, we were having a slightly upward trend, you can say, and now that has been smashed down at minus 1.7%. Some support may come through at this level, but the way markets were thrashed today, there can be some more downsides also. And small caps are showing you that downside where the previous low was uh, not only broken but convincingly much below that, 2.27% for the small cap space. Bank Nifty also losing the last day's gain. So we are back where we were on Thursday at 0.9% down. Gold is flat, 12,918 per gram at 0.46% minor gain. And silver is actually again nearing its all-time high, close on the daily basis at 0.71%, 1 lakh, almost 80,000 per kg is the price there. The advanced decline trends are quite, uh, you can say, abysmal, where it started very high, the declines, and they continued to go higher through the day. So there was no point at which there was a fight back against this fall. The sell-off was so sharp. So only 31 advances in 500 stocks. That tells you the breadth of the move. I think it is also signaling that maybe the market has given up on the optimism of US trade deal, although there were some rumors yesterday that the trade deal is back on the table. But I think post Putin's visit, that also seems to be behind the uh, expected outcome now. Nothing was spared today, whether it was banking, whether it was autos, whether it was FMCG, and the significant losses were foreseen in JSW Steel, in Bharat Electronics, uh, in Indigo, of course, 8.2%, Bajaj Finance, State Bank of India also not be getting spared, and Nifty Next 50 was even more red, where 2 to 4% is sort of the norm for most stocks. Masdok losing 5%, HAL losing 3.5%, Vedanta 2.5%. So this is looking like some sort of a big liquidation that has happened. And normally, when such a bigger move comes, it is not a single day move. It is usually lumped with few days of such moves and then, of course, some consolidation. So it will be surprising if we just have today's down move and the rest of the days of the week become uh, a, a non-continuation of this. We may get some breather after this move, but the force of this move sort of suggests that there is more to come. Mover of the day is Keynes. So Keynes Tech is down 26% in just 3 days. The stock was nearly 8,000 rupees just not so far back, and we are at 3,800. So, it tells you the importance of having some exit plan at some point, because you really can't say uh, when it can come and hit your stock, the down move as such. In the sectoral trends, no sector able to make any gains. Only Nifty IT managed 0.29% fall, which was the best performer amongst all sectors. Nifty Financial Services, Oil and Gas, Private Banks all down 1% or more. Infrastructure, Auto, FMCG, Pharma 1 to 1.5%. Energy, Capital Markets, MNC, Manufacturing Index Consumption 1.5 to 2%. And you have uh, metals, public sector enterprise, CPSEs, PSU banks, tourism, real estate, and defense getting really badly hit, 2 to 3.5%, and even more, 3.68% on the defense sector. Godrej Properties, Anantaraj, Prestige, DLF, and Sobha have led the real estate down. Uh, it was looking like a nice support here to take off from here post the interest rate cut, but it seems that the interest rate cut has just come and gone, and there is no impact of it at all. In fact, the market is much worse right now than where it was. Defense also cracking hard. There is a sort of a head and shoulders pattern also included in this. So a lot of pattern based moves are happening. The whole fall in the small and micro cap space is because of the give up of the support region. So while technicals are seen as not so important, but they do sort of point out towards very vulnerable points in the market. And data patterns: Bharat Dynamics, Misra Dhatu, Unimac Aerospace, and Bharat Electronics losing most of the ground within defense stocks. In the previous session of the US markets, S&P 500, Dow Jones, Nasdaq all gaining slightly. Russell, however, down 0.3%. You have Adobe up 5.3% after a long time. Stock has been falling since 700 plus. So it's a good move here. Salesforce up 5%, Booking Holding, Charter Communication, and Broadcom all doing well in the previous session. So US market is yet to be hit by any weakness. And the emerging market, especially India, is getting hit by a lot of weakness. So it's very counterintuitive sometimes when you think about where the growth is coming and where the markets are moving. Disclaimer, of course, that some of these stocks may be part of the weekend investing US stock strategy. These are not recommendations at all. In the tweet of the day segment, here you can see the very strong support that small caps have created from June, August, September, October, and November. Almost 4 or 5 times this support was uh, tested, and the market did not fall below it, but today it chose to really go down. It is also basically following the micro cap pattern, similar pattern, but it broke down 2 days earlier. And this was the tweet in the morning that if we don't recover today, it's a significant breakdown. This is an announcement. We are doing a mega launch on 13th of December. There's a live webinar. Please come and join it. There's a link in the description likely. And that's the end of this video. Do watch out for our next video. If you want an expert advice on stocks, we'll take a very interesting take on this subject in the next video. Do join the Weekend Investing Community. If you like our content, you can get more premium market insights there. You can just drop your email in the form below. And if you like this video, do like and share this, and do subscribe to our channel. Thank you. Bye.